Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SWHY Hongyuan Group Co. Limited Annual Report. SWHY Hongyuan Group Co. Limited offers a wide range of financial products and services to various customers. The company operates through four main segments: enterprise finance, personal finance, institutional services and trading, and investment management. The enterprise finance segment provides equity underwriting and sponsorship, debt underwriting and financial advisory, and debt and other investment services. In contrast, the personal finance segment offers securities and futures brokerage, margin financing, stock-backed lending, agreed repurchase securities trading, and investment advisory services. In addition to these services, SWHY Hongyuan Group Co. Limited also provides institutional services and trading, which includes prime brokerage, proprietary trading, research and consultation services, as well as trading of various securities and derivatives. The company's investment management segment offers asset management, mutual fund management, and private equity fund management services. Furthermore, the company is involved in other financial services such as securities underwriting and sponsoring, wealth management, risk management, venture capital, investment research, and corporate financing. These diverse services make SWHY Hongyuan Group Co. Limited a comprehensive financial institution catering to various customer needs. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth is primarily driven by the strengthening of the financial services industry, with a focus on improved quality and efficiency. The shift towards prioritizing functionality has also contributed to revenue growth. Additionally, the active role in serving the real economy, cross-border mergers and acquisitions, and the upward trend of return of Chinese concept stocks have all contributed to revenue growth. The expansion of wealth management services, including asset allocation and wealth planning, has also driven revenue growth. Industry mergers, acquisitions, and restructurings have formed a differentiated industry development pattern, further contributing to revenue growth. The growth in non-money funds, concentration of private fund distribution towards compliance and top-tier players, and the expansion of financial product sales and holdings have all contributed to revenue growth. Furthermore, breakthroughs in consignment sales of FOF products at banking channels, enhanced product penetration through full coverage of mainstream channels, and rapid growth of social net wealth in China have all driven revenue growth. The development of the mutual fund industry at a fast pace has also contributed to revenue growth. On the other hand, revenue decline is primarily driven by a decrease in interest income. SWHY Futures Co. Limited and SWHY Fund Management Co. Limited have both experienced a 3.8% decrease in revenue from 2024 to 2025. These factors have contributed to revenue decline. The net income of the company experienced a significant increase of 36.72% in 2025, reaching RMB 4.828 billion. However, this growth was not uniform across all business segments. In enterprise finance, net income decreased by 6.27%, while in personal finance it dropped by 3.67%. On the other hand, institutional services and trading saw a notable increase of 4.64%. And investment management experienced a substantial rise of 14.02%. The profit margins also underwent changes during this period. The company's optimized social financing structure, improved quality of listed companies, and accelerated transformation from product sales to asset allocation and wealth planning contributed to the improvement in profit margins. Specifically, enterprise finance saw an increase of 21.43%, personal finance rose by 32.94%, institutional services and trading surged by 44.57%, and investment management increased by 21.23%. However, it's worth noting that overall profit margins decreased from 2024 to 2025. The company is generating positive operating cash flow, as evident from the various financial statements provided. On page 90, it is stated that there was a net inflow of RMB 8,951 million in cash and cash equivalents. Furthermore, on page 91, an increase in operating cash flow of $9,387,879 is reported. Additionally, pages 358 shows that operating cash flows before movements in working capital stood at RMB 15,848,484, indicating a significant inflow of funds into the company's operations. These figures collectively suggest that the company is experiencing positive operating cash flow, which is essential for its financial health and stability. The company's interest expenses have undergone significant changes over the years. Initially, there was a decrease in interest expenses by RMB 554 million minus 6.34%, as reported on page 89. This trend continued with a further decrease of 6.1% from 2024 to 2025, as mentioned on page 349. However, on page 465, it is noted that the decrease was only RMB 11,201 from 2024 to 2025. On page 467, interest expenses increased significantly, but no previous year's value was provided for comparison. A more substantial increase was observed on page 499, where interest expenses rose from $70,550,881 to $130,326,305. Overall, the company's interest expenses have fluctuated, with both decreases and increases recorded over the years. The performance of various segments and regions within the company has been mixed in recent times. On a positive note, institutional investment, enterprise finance and trading management, principal investment banking, and institutional services and trading have all shown strong results. These segments have seen significant increases in profit margins, with some as high as 14.02%. The European and United States markets have also performed well, along with countries participating in the Belt and Road Initiative. In contrast, personal finance has struggled, experiencing a decline of 3.67% in profit margin. Smaller securities firms and regions outside of key expansion areas have also underperformed. Additionally, the fee and commission income segment and personal services, management total, have shown poor results. These poorly performing segments and regions will require attention to improve overall performance and stay competitive in the market. Management is emphasizing a pragmatic approach to serve the real economy and cultivate SWHY with greater effectiveness. The company is focusing on its principal business, scientific and technological innovation, and new quality productive forces as strategic opportunities for the securities industry. In terms of national strategies and emerging industries, management is prioritizing service to the 5 priorities on finance and initiating establishment of Xinjiang's first Science and Technology Innovation Fund. This includes expanding strategic national projects and supporting emerging industries, enhancing financial service capabilities for major national development strategies, and cultivating a business ecology that follows national strategies. The company is also undergoing business transformation and growth, proactively aligning with market transformations and advancing core business transformation. This involves deepening specialized research to serve national strategies and regional development, launching new research products and service models to expand brand influence, and increasing investment in research to enhance core competitiveness. In terms of asset management and investment, management is focusing on long-term capital investment in the market, improving core competitiveness of asset management business, consolidating and improving investment research system, enhancing active management capability, and strengthening product planning and enriching product system. Risk management and compliance are also key areas of focus, with management consistently treating policy tracking, interpretation, and adaptation as a vital component of strategic management. This includes striving to seize market opportunities while adhering to regulatory guidance and mitigating policy risks. Finally, management is prioritizing corporate culture construction, aiming to become a first-class investment bank and institution worthy of long-term trust through professional services and value creation. The company is also prioritizing ESG-related planning, objectives, systems, and major issues, implementing a unified same customer management mechanism to achieve unified credit extension. The company's financial activities involve both acquiring and divesting various financial assets. In terms of acquisitions, the company has made significant purchases of financial assets totaling $6,672,131 on page 474. Additionally, it has acquired financial assets at fair value through profit or loss worth $269,523,600. Margin accounts receivable valued at $74,844,217, and cash held on behalf of brokerage clients amounting to $111,689,377. On the other hand, the company has also engaged in divestitures, which include sales or settlements of financial assets totaling $15,340,934 on page 474. Furthermore, it has sold financial assets under repurchase agreements worth $185,697,288 and $186,005,634 on pages 498 and 499 respectively. Other notable divestitures include derivative financial liabilities valued at $9,628,944, long-term bonds amounting to $123,160,377, lease liabilities of $814,689, and other payables and accruals totaling $58,011,592. The company has a history of paying dividends to its shareholders. This can be seen from various pages in the document where it is explicitly stated that paid dividends. Yes. The amount of dividend paid varies, with some instances showing a cash dividend of Rm 877,995,842, and others mentioning specific amounts per share. The company's dividend policy is also mentioned on page 110, which outlines the formulation and implementation details of the company's cash dividends policy. This suggests that the company has a structured approach to paying dividends to its shareholders. In addition to the explicit statements, there are several instances where the amount of dividend paid is specified, such as RMB 0.46 per 10 shares distributed on August 13, 2025, and RMB 0.35 per 10 shares in October 2025. These details provide a clear picture of the company's dividend payments. Overall, it is evident that the company has paid dividends to its shareholders, with specific amounts mentioned throughout the document. There are concerns about inventory buildup or supply chain disruption. On page 435, it is mentioned that a subsidiary's inventory was sealed due to storage contract disputes, indicating potential issues with inventory management and supply chain logistics. Furthermore, the provision for impairment losses increased significantly, suggesting that the company may be struggling to manage its inventory effectively. However, on page 437, it is reported that inventory levels actually decreased from 576,782 in 2024 to 407,653 in 2025. This reduction in inventory suggests that the company has made efforts to address any potential issues with inventory buildup or supply chain disruption. Nevertheless, the initial concerns raised on page 435 remain a cause for concern and warrant further investigation. That concludes the financial summary for SWHY Hongyuan Group Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.